So good morning, everyone. Welcome to the CalHFA Audit and Risk Management Committee meeting. We'll go ahead and begin since we do have all members present. So I will give our team half a minute so we can go ahead and do the roll call.
Thank you for your patience. Mr. Henning for Treasurer Ma. Here. Dr. White.
Here.
And Chair Sotelo.
Here.
We have a quorum.
Wonderful. Thank you so much, Melissa. So before us, committee members, we have the approval of the October 23rd meeting minutes. We'll give everybody a moment to take a quick look at those. And if there are no changes, I'll entertain a motion.
Motion to approve.
Okay, is there a second?
Second.
Okay, so we're going to go ahead and approve those minutes by consensus. Wonderful. So our next item is the chairperson report. I really have no report to the committee, although I did want us to focus some time and energy to figure out when our next meeting will be because of the new overview of the risk management component. I want to make sure that we're meeting more frequently. So maybe we can spend some time at the latter part of the agenda to discuss potentially setting up another meeting. But other than that, there's really no other report backs to the committee with regard to the chairperson. But I am excited to say that today we are reviewing the audit with the year ending June 30th, 2024. So we have here present our team, and then we have folks via remote on video. So with that, I'm going to go ahead and move to item number 4, the audited financial statements. I'm going to turn it over to Oksana, our CalHFA Comptroller, and I'll let you go ahead and introduce the item. Thank you so much.
Great, thank you. Good morning, Madam Chair Sotelo and esteemed members of the Audit Committee. My name is Oksana Glushenko, and I have a privilege of serving as the Agency Comptroller. Today, I'm here to present the results of fiscal year 23-24 financial audit. Joining me are Principal Mandy Merchant and Senior Associate Liz Richardson from Clifton Larson Allen. At our October meeting, I mentioned that we have received the necessary OPEB and pension information from the State Controller's Office, and we were on track to deliver the agency financials by the mandatory statutory deadline. I'm pleased to report that the auditors formally signed off on this year's audit on December 9, and this is just 5 months over after the fiscal year end. Our team has maintained close communication with the State Controller's Office and to ensure that we remain on schedule and avoid any future delays moving forward. This achievement represents a significant milestone for State Controller's Office, and we'd like to express our sincere gratitude to them for their continued collaboration and tireless efforts alongside with CalHFA team. I would like to also take a moment to acknowledge our independent auditing firm, Clifton Larson Allen, for their flexibility, expert guidance, and unwavering diligence throughout the audit process. I'm proud to share that this is our 7th consecutive year that we have been awarded the Certificate of Excellence in Financial Reporting by the Government Finance Association. Now I will turn the floor over to Mandy and Liz, who's going to walk us through the financial presentation.
Thank you, Oksana. I appreciate that introduction. All right, everyone. Well, good morning. I'm getting ready to share my screen. Did you guys do, hold on, let me see, hold on. Something's changed on the sharing, hold on. Oh, here it goes, I'm sorry. Okay, I'm good. Can you all see that now?
Yes, we can see it.
Okay, sorry about that. So, okay, well, as I said, good morning, everyone. We are very excited to be here with you all today. I'm sorry we're not there in person, but we will be out later this year to see the team and hopefully see some of the members of this committee. Going to kind of flip over one. I am Mandy Merchant. I am the audit principal in this engagement. Been working with the agency for many years. Also, I've been joined with Elizabeth Richardson, who is the senior in the engagement that has been alongside me all the years we've been working on this engagement together. So today we have a couple things we'll be presenting. We're going to go over the audit report, and within that audit report that you should have received, we're going to talk about the audit opinions and the overall audit process, how we started and how we got to where we are today. We're also going to look at some financial statement highlights, talk about some governance communications that were required to communicate to this committee, and then lastly, wrap up with some audit changes that occurred during the year and some upcoming GASB pronouncements. So since I cannot see you all, if anyone has a question, please feel free to interrupt at any time, and I'll be happy to stop and answer your question. Okay, so first up, the audit scope. So the responsibility as part of this audit, our deliverables, was 3 audit reports that were within the ACFR, and there also is a separate, so the ACFR has 1 report, and then the single audit has 2 reports. So we have the report on the agency's financial statements, which is the report at the beginning of the ACFR. We also have the report on internal controls over financial reporting, and that is part of the single audit. And then lastly, we have the report and the internal controls over compliance, which that is also part of the single audit. And we will go over those results after this. We also issued a required governance communication that we'll talk about. And then lastly, the data collection form was submitted to the Federal Audit Clearinghouse. Oksana gave a very nice introduction about the datings of these reports this past year. I would like to boast that we did issue 2 audit reports in 1 year. So the earlier report was issued and I think it was, let me see really fast. It was in June of 24, and then we issued the second one in December. So kudos to both teams being able to get out 2 audit reports in 1 year.
Duly acknowledged.
So next up, just the audit process. Just kind of want to just give a high level of how we start and where we get to. So obviously, as part of the audit, we cannot audit every single number. So we do a risk-based approach. And what that means is we actually audit about 15 HFAs across the country. So based on that industry knowledge, we're able to say, hey, we've seen a lot. We kind of know where we need to home in on. And then with our history with CalHFA, it also helps us come up with our approach. So as part of that, we go through your internal controls. We talk to the staff and management about the main processes, cash disbursements, payroll, the mortgages. We look at single family and multifamily. Look at delinquencies. We look at the allowance. We spend a significant amount of time understanding your controls, ensuring you have them. We assume that if you have controls, people are reviewing and approving that the numbers that we ultimately audit as part of the process are correct.
You do this.
We spent a lot. Excuse me.
You do this all remotely.
No, we come on site.
Oh, you're on site. Okay.
Yeah. Yep. We come on site for about a week. Yep. So it's not. We used to come on site for probably like 3 weeks, but we're able to do this less. So we do a lot remote, kind of get ready to come on site, and then while we're on site, we really, talk to everyone, spend a lot of time face to face with the team, your team, to talk about things. So, revenue recognition is something we always have to overcome. That's a big risk out there, is has revenue been properly recorded? So we do spend a lot of time, when you look at your income statement, you don't see a lot of revenue because most of your activity is loans. So your activity is the fees you're earning, interest, that kind of stuff that we test to make sure that's been recognized correctly. Significant estimates, which we'll talk about a little bit later when we look into the governance communication. You have a lot of loans receivables. That's where we spend the majority of our audit, looking at those receivables to make sure they're valid. Are they being collected? Is the allowance appropriate? Does it meet industry standards, GAAP? So that's where we spend a significant amount of our time. And then also with the debt and the covenants and the swaps that you don't have anymore, congrats, and down to 0 on that. But I think did I hear some rumors you might get some more swaps, that, you might get those in the future, but we do spend time on that. And then lastly, the single audit, where we do look at the programs of the federal money you're receiving. So all of that is very important. And we'll go over kind of where we ended at the end in another slide, but this is where we started out our audit process before we got to the end. So any questions on the audit process? I'm not sure if anyone is not familiar kind of, what auditors usually do, but let me know.
Mandy, my only question is of when you're out here and surveying, what percentage of the files do you look at? Are you looking at, you're running a test of like 10% of the files or?
So
20?
AICPA provides us guidance. It's kind of a whole bunch of different numbers, like 10% is a good number that's out there. But we look at on the transaction side, when we're looking at cash disbursements and payroll, we're looking at between 25 to 40 transactions. That also comes into play for the single family and multifamily loans from an internal control standpoint. But then we then send out confirmations, and the confirmations we send out is really, it's called monetary unit sampling. And we usually send out a couple hundred. So that's when we're sending them out to, the multifamily projects, properties, and then out to the single family individuals. So that sample varies. On the single audit, same kind of process, but where we either send out about 25 or test 25 or 40 on each one.
And of the confirmations you send out, what's your percentage of return?
On the multifamily, I would say, what do you think, Liz? We're getting a majority back.
I would really say 100%. The CalHFA team helps us with that follow-up. They reach out to the borrowers as well
Yes.
to ensure that they send them
Yeah, for
back to us.
multifamily.
So yeah, we, if it's not 100%, it's probably like 99, 98%.
Okay. And what
And
about
on
the
this-
single family side?
0. We send out negatives. So basically we tell them if you don't have an issue, you don't need to do anything. But if you have an issue, raise your hand. And Liz, did we hear from anyone this past year?
I think I had a few individuals call me just kind of with questions. A lot of times this is the first time they've ever really received a communication like this, and they just kind of want to talk through the process, but we did not have anyone return a confirmation saying that they had a difference in the loan amount.
Okay. Thank you.
You're welcome. Very good questions. Okay. So on this slide, just kind of want to talk about the results of our audit. So as I mentioned before, we had our audit opinions on the financial statements and on the federal awards, and I'm happy to report those are unmodified opinions, or as we like to say, clean opinions. In addition, our audit results. So did we have any findings? We had no findings. So no material weaknesses and significant deficiencies on either financial and federal awards. So congratulations on that. That is a great accomplishment for the agency. So I don't know if anyone has any questions on that.
No, I mean, just congratulations to the team. It's a reflection of the great work that CalHFA does.
Okay. So the next up is just some governance communication, which is a separate letter that you all should have in your possession. And this letter just kind of goes over kind of things we've kind of a little bit talked about, our overall responsibility under general accepted audit standards. The no changes from plan scope is a very important one, is that we came into this audit, and started it and had an approach. We had a scope, we had a plan, and we were able to execute that plan and get to the end. We didn't have to make any changes at the end. So nothing came to our attention that kind of put a little bit of a speed bump into our plan. So that's good to report that there was no changes. There was no significant difficulties, no disagreements, and we're not aware of management speaking to any other accounting firms. As I mentioned earlier, there are significant estimates within these financial statements. So a couple of them for us to talk about is obviously allowance. The allowance is a management estimate. So the management team internally has come up with a very sophisticated process and spreadsheet in determining how to, determine allowances on the single family and the multifamily side. Obviously, depreciation is a management estimate. You don't have a lot of capital assets, so it's not a material one. And then lastly, pension OPEB. Pension OPEB is not something that you all determine. That is determined by the state, by an actuary based on assumptions. So that is something else we have to disclose, that there are estimates within these financial statements. And then last up, We did not have any audit adjustments, which is great. That means that we received a trial balance upfront from your finance team. We were able to go through our audit procedures and our audit process and did not come across any kind of adjustment that had to be made to make sure that the financial statements were not materially misstated.
Okay. Mandy, can we hover on the allowance calculation for a moment, and maybe Oksana or the team can talk to us about this, but on the allowance side for the multifamily, are we projecting repayment and servicing of those loans, and that's why it's an allowance? Is it based on historic performance, or, how do you determine, without getting too complicated into the details of it?
Our financing team spearheads the process, but this process based on the formula of historical performances.
Okay.
And we are closely monitoring portfolios, so the loans are either like missed the payments or in some kind of, workout process that we obviously consider the higher allowances on those instances. But for the rest of the portfolio, we just kind of maintain the regular percentage, about maybe 10%.
10%, okay. And then in terms of, Mandy, in terms of the allowance, do you test whether the allowance calculation is heavily weighted on, defaulted loans, or, do you treat kind of all the loan status the same?
No, we look at that. So we do, we look at loans that have defaulted during the year if there has been any. So, because basically GAAP requires you to look at it in two ways. You look at it from like the overall portfolio, and you do a look back, and you say, okay, historically over the past 5-10 years, like we've written off X amount of loans, and then you take that into account. And then they also ask you to do single identification. So then you look at, okay, here's all our loans that are over 60 days not paid, 90 days. So we kind of follow that methodology to kind of apply into our work. And what we have found with your agency, and I would say every other HFA, is that HFAs are overly conservative. Because if one multifamily goes wrong, a big multifamily goes wrong, you got a huge loss. So that's what we see. So we're not seeing any, we didn't see any big losses or any big write-offs. Liz, jump in if I've missed something, but I don't recall that there was any huge REO that came in on a multi or anything substantial in the single families.
No, that's correct.
Yeah.
So, I'm sorry, go ahead.
I was to say, does that answer your question?
It does. One of the things that from a committee perspective I'd like to take a look at is the nexus between understanding what the audit procedure and process is, right? Which you're doing a great job of explaining, but then creating the correlation on how we are actually performing as an agency, and the default rate, and everything that the audit actually results in. So it's not so much, I definitely care that the way you're auditing reflects the good work that the team is doing, and that their financial analysis is consistent and is within, is excels in terms of all the standards of your audit. But beyond that, on the risk management side of this committee, I'd like to maybe spend some time in terms of what does the audit reflect in terms of our performance, right? And that's kind of a nuanced difference.
Yeah, so you're going to want to look at note 5. Note 5 in the audit talks about the allowance for program loan losses.
Okay.
And that is really where, as a risk committee, you'd want to be like, okay, is this enough? Like, we have a $86 million allowance right now. Is that sufficient for our portfolio? And then as a team, you all need to address, does that make sense? And again, you would look back, what I mean? Like, have you had, huge losses over the years? Has anything resulted that you'd had to eat into that allowance, or is that just something, is this look good? But that's where I'd recommend for you all to start.
Right. So I think based on that, that's a really good point. And as we look at the committee agenda for the next time, maybe taking the approach of, how did we do in 22? How did we do in 23? Kind of what's the historical performance and where we are relative to an item like the allowance, right? And what's the actual versus the allowance? Because that's the other for me, from a risk management assessment, that comparison is a critical one.
Correct.
And using the audit as a tool for that analysis, I think is the purpose of what we're trying to do here on the committee. Does that make sense, directors? No? Yeah. Okay. Great. Thank you, Mandy.
You're welcome. Okay, so next up, I'm going to turn it over to Liz, and she's going to kind of do some highlights over the changes in the prior year.
All right, so again, I'm not going to go into detail of every single change. We just sort of picked some of the more significant changes from prior year to go into more detail. But as you can see, in the fiscal year 24, there was an $82.9 million increase in current cash and investments. The primary reason for that was the new bond issuance that you all had this year under the Affordable Housing Revenue Bond indenture. And then there was also just an increase in the value of the money market accounts. There was also an overall increase of $101.5 million in the non-current investments. That was just primarily due to purchase of mortgage-backed securities during the fiscal year. And then overall, there was a $56.8 million net increase in that program loans receivable. And that was primarily due to an increase on the multifamily side under that new bond indenture. I would say overall, there was a net increase in 10 multifamily loans, but just keep in mind that those are the larger dollar values. So that was driving that increase.
Okay. And that's because we loaned out the funds and the bonds, and it becomes a receivable at that point.
Correct. Okay, next slide.
Yep.
All right. On this side of things, we saw a $53.2 million increase in the loans payable, and that was primarily due to an increase in that line of credit with Brayburn, and then just additional FHLB multifamily loans. And then sticking with the theme here, there was a $79.9 million increase in the bonds payable, just going back to that AHRB bond this year, kind of driving a lot of things in FY24. And then overall, there was an $18.4 million decrease in the other non-current liabilities. That was primarily due to decreases in deferred revenue for the EBL and the NMS programs, just as that activity is kind of continuing, that liability is going down. And then that was offset by just changes in the OPEB liability due to the current year estimates.
So that increase of 7.5 is the pension increase, the exposure. On the
that was
pension?
it was on the OPEB side.
Oh, okay. Oh, OPEB, yeah. Does the CalHFA team want to add any color to any of these numbers?
Unless you have a specific question, but I think
No.
it's pretty detailed that what the auditors are describing, so thank you.
Okay, it just, you know, it's a lot of good work that you're doing, so I just thought I'd give you an opportunity to
Yeah.
highlight it.
But thank you. I'm happy to answer any questions you may have. so.
Okay. Do committee members have any questions about the changes?
No.
No? Okay.
All right, so a couple more changes on the statement of revenues, expenses, and changes in net position.
Mhm.
This year, there was an overall 36.5 net increase in interest income, and that was primarily due to just more favorable rates in the market this year. There was a $17.8 million decrease in loan fees, and that was just due to less activity on the single-family loan side this year. There was around a 4% decrease in loans this year. So on the single-family side, it was around, I think, 1,500 loans, not very many. And then there was a $27.9 million increase in salaries and general expenses. Again, that was just due to the current year changes in the pension and OPEB estimates. As Mandy mentioned, there were no more
I'm sorry,
swaps this year.
what's OPEB? OPEB estimates?
It's other post-employment benefits, OPEB.
Okay.
Sorry.
No, that's all right. So that's just the normal governor's budget. It's what the rest of the department's allocated for.
Yeah, we have
That's-
received information from the state controller's office, and then the CalPERS is obviously maintain the pool of all the retirees, and they calculate the proportionate share attributable to the agency based on the headcount.
Okay.
And most of that driver is the performance of the portfolio. Just depends how well the portfolio did in the year.
All right. In FY '24, there is a $21.8 million decrease in that investment swap revenue, just again, due to market conditions. And then last but not least on here, we have a $125.5 million decrease in the net of the transfers in and out. And that is just due to a reduction in the funds received for the SB2 program, as well as that moderate income program.
The MIP program? So this is money that was outlaid. I'm sorry, explain that again?
So in fiscal year '23, there was a more significant amount of money received for those two programs. Whereas in FY '24, there's fewer amounts allocated. And so it was just a net decrease in that money transferred. for
Okay,
those
so
programs.
yeah, it's based on the allocation of the MIP program to the agency for deployment. Okay.
Correct.
It's the 15% of the SB2 revenues that we receive for the MIP program. And as you know, it's based, it's based on overall real estate activity in the state of California. And so when real estate activity was really robust in 2020 and 2021, SB2 revenues to the agency were very high, and it's gone down since then. So that's sort of affects sort of this, that's the main driver of the decrease for SB2 revenues.
But to answer your question, Chair Sotelo, yes, we do allocate the SB2 monies to the MIP program as far as operationally.
And is the funds for the staff, is that shared between, just like what we just were talking about? Or is the staff solely for this purpose and they're allocated out of this budget?
No, the way we budget staff is an overall agency budget, and we don't, the SB2 monies is solely for the subsidy provided through the mixed income program.
Okay, so those monies are separate.
Correct.
Okay.
So the staff number will stay the same regardless of what percentage we get allocated each year
From the general fund?
from the general fund. I mean, from
Not the
SB,
MIP program?
no, from SB2.
Okay.
So I just want to add something. So SB2 money, each CD, it sort of spearheads the program. So they received allocation from all the counties from the state of California, and they do the computation. So the 15% portion is allocated to CalHFA. So we reconcile the records to make sure that all the fees are received and our 15% portion is accurate. So I do have some records just to add some color to the questions that were kind of asked earlier. So in fiscal year '22, in one quarter, we were receiving $13 to $10 million. And right now for for quarter one and fiscal year 2024, we were only allocated $7 million. So there's been a significant decrease in the collection of the funds that the county collects. So every time somebody completes the real estate transaction, they collect $75 at the signing.
Right.
And is the 15%, is that a state percentage for administration, or is that CalHFA general policy?
15% is what was allocated by the legislature due to CalHFA.
Okay.
Yeah, and then the board decided to allocate, from a policy perspective, decided to allocate the SB2 proceeds to the MIP program to help fund mixed income programs.
Correct. Thank you.
So in our retreat or our business development meeting, whatever we're calling that for next time, it would be good to get a report back of these 3 slides showing the kind of programmatic impact over the last several years as reflected in the audit. So maybe we could carve some time aside within the business planning meeting to just go over these numbers, because there's a strong correlation between the program activity that we have and the financial impact that it has on the, on CalHFA, and then also kind of our risk profile as a result of that.
Yeah, I think in the first day of the March meeting on the 19th, we're dedicating the first part of that conversation to the long-term financial strategy towards the agency. Mr. Tam will be presenting with some of our financial market partners. So we can definitely, I think, work that in. I think the takeaway we're trying to make with the SB2 funds is that it's been decreasing year over year as, less transactions, real estate transactions have been happening. So, and that's the main feeder for that subsidy for the mixed income program. So I think from a risk perspective, that is more than pertinent to call attention to.
Yeah. And so, Mr. Tan, as you prepare the presentation, always look at it from the context of what we've seen historically. And now 3 years of historic, audit information, I think is a robust enough conversation to have. Okay, thank you. Sorry, Mandy, to keep interrupting. Go ahead.
Oh, you're fine. This is great discussion. So happy you guys have some takeaways for your meetings.
Yeah.
Okay, so the next couple of slides, we always kind of show these slides to kind of see where you all been the past 5 years with some of your major accounts. So here we just kind of wanted to show where you were with the program loans, receivables, and the related allowance. As you can see, based off Liz's discussion, there was an uptick because of the bond issuance and some loans going out, mainly on the multifamily side. But there was an uptick in the loans because they were kind of taking a tick down for a little bit and then kind of went back up. So this is some just, historical data for you to look at. Here on this side is then looking a little bit further down, looking at the single family versus the multifamily. And you can kind of see how that's been moving on. I know for a while you all been doing, investing on the single family side in the MBSs. So that makes sense why you're kind of just, not seeing the program loan receivable for single family go up, but you do see that going up for the multifamily side. Right here, again, just kind of looking at the number of loans. So you can see there is a decrease in the number of loans. As they're going up, you can see on the multifamily side during 2024, there was a little bit of an uptick with the new issuance going out. And then that is it on that. Any questions on any of these slides?
This may be more for Mr. Tan. I apologize, Madam Chair. And I'm just trying to wrap my head around the employee rate. Does that assume full staffing and full benefits for all employees allocated, or is that actual people in positions in a vacancy rate?
Good question.
Yeah, so the numbers presented in this is from our fiscal year ending June 30, 2024 audit. So those are actual numbers. I'll be presenting later today on our projected operations for this fiscal year.
That's fine. I was just trying to make sure if it's actual or.
Yeah, exactly.
Great question. Okay, Mandy, go ahead.
Okay. All right. So just a couple things. Just significant audit changes that happened during the year. Just want to highlight this is that this new auditing standards 143 to 144. Obviously, with, as they say, the modernization, evolving business environment, how the IT world is changing constantly. The auditing standards came out and said we had to do more from the IT standpoint. Now, if you don't know, we do a significant dive into your systems. We do a full IT review, looking in, access controls, making sure, who's supposed to be in the system is allowed in the system. We review some internal controls within the system. So we do a lot on the IT side. So what kind of the audit impact there was more communication, there was more questions in order to meet these required new standards. Probably going to keep seeing changes like this just as the world changes from the AI perspective and anything IT related. So that was just something I just wanted to communicate to you all that happened during the year. For new GASB standards, the only thing, actually GASB's been kind of quiet, but the only thing that's coming out this year that's going to be applicable for the audit for 25 is new GASB 101. And 101 basically is about the compensated absences. So think about your vacation and the sick time. And basically what GASB was seeing is that there wasn't really consistency across the industry of how people were reporting those liabilities, or if they even were reporting a liability. So this standard is asking the agencies to go back to their policies, make sure what your policy says is actually what you're practicing. So if you say that you're going to pay out, only 60 hours if someone terminates, then that's historically what you've been doing. So they want you to look at your policy, they want you to do a look back, and then they want you to possibly be recording either less liability or more liability. The couple of things in there that probably everyone didn't think about before was, sick leave. Usually people say that it's not being paid out, but we're finding sick leave as being paid out. Parental leave, maternity leave, any kind of military leave is something to be considering. Another just one off is just making sure the taxes, like the FICA, is being accrued too. That was one thing that they were seeing, is that not all the appropriate amounts were also being accrued as part of the liabilities. So this could have a small impact, a large impact. I think you all have a process in place right now, so not going to think this is going to have much impact. We are here to help. We are working on some guidance to provide out our clients, so we will be able to turn that over to you as soon as we have that. So I don't know if anyone has any questions on that.
Yeah, I mean, please correct me if I'm wrong, but I believe the state has a policy of it's like 900 some odd hours you're able to accrue within a year, but there is no vehicle at this point to force an employee to only have that amount of time. And so there are excessive leaves.
Yeah, that's correct. So what I wanted to talk about GASB 101, we actually started the implementation already, and kind of, so we work with State Controller's Office. We receive the tapes for each of the employees,
Yeah.
and then we have historical data. So what GASB 101 dictates is basically estimated probability, how much on any given year the employees will be possibly taking, more or less, of a sick leave. So it's not a specific hour or
Okay.
this, it's a probability of you going on sick leave and paternity leave or maternity leave. That's what would be doing. Because in the past, what was discrepancy was when we look at the financials, we only were reporting current and non-current on the vacation hours, and sick leave was not even considered. But technically, if the employee is on sick leave or paternity leave, then the agency is liable and responsible for paying for those hours, and it was not captured in the agency financials.
I really do appreciate that. I do have a concern from running another state agency that, there are some employees, I just dealt with an employee that had over a year of vacation time. That causes
wow.
ripples within our budgeting system and ability to budget for those types of things. And when you have the ability to leave or state service at any given time, it's hard to predict. It would be nice, and I don't think that this is the appropriate place, but maybe in further discussions, if you could just let us know how many people have at CalHFA have more than the state's guidance when it comes to leave time. Would
Yeah,
be helpful.
the guidance is 640 of paid leave, so not all leave has a monetary balance to it. At CalHFA, we do have all of those employees on what we call leave reduction schedules that we annually do.
But they're not enforceable from my understanding.
We do try to enforce them as much as we can, yes, but we do have the schedules, and so we do have the number of employees and the hours in excess that we're trying to have them. It is a balance, as you know, people need to be present and work kind of ebbs and flows, but we do certify annually that the employee is trying, we give them a number to decrease by annually, like a goal, and they're working towards that goal and they're trying to plot. So we do encourage that reduction to happen, but yes, we can definitely get that information on that liability.
We've just seen an explosion, particularly through the pandemic, of people who now look at work from home as sick leave because they can feel like they can work as well at the same time. And so we've just seen a lot more of those numbers increase a lot. So I think they're particularly important when we look at the entire budget.
I've also seen the numbers increase during the PLP, the furloughs, that kind of thing. And then there is priority given to using those accrued hours first. So then the paid leave balances do rise. Yeah.
So maybe we contextualize this in a broader conversation around policy. I don't know where the policy would live within CalHFA, whether it's, risk management or under the controller or under HR, but maybe we can get a report back when Mr. Tan does the personnel budgeting report in March. Maybe we can, just do a snippet about asking two questions. One is, what is our policy regarding each of these types of leaves? And then, given our policy, what is our exposure current for fiscal year '25?
Right. So, and I will obviously work with our Chief Deputy Director and our Director of Administration to provide you the right information about leave and the leave policy, which again, we adopt as all of our employees are state employees. So, we are consistent with other, all across the state, our leave policies are consistent.
Great, so
But
we
in
just
the-
spend a little bit of time on that.
Right.
In a future meeting, not now, then we'll go through that.
But I think in the context of risk and that liability there, then we
Yeah.
can definitely
Report back
quantify
here.
that for this group. And either in the March or the next time we bring the operational budget at the end of the quarter, so May, we can, either way, we can bring a report back.
And Mandy, we're running a little late on time right now, so unless there's
I'm almost
anything
done.
major.
Yeah, I'm almost done. Yeah, no, I was going to tell you guys also in the financial statements on page 66, there is a compensated absence footnote that talks about the liability. So it just might be something for you guys to springboard off of. That is it.
Great.
Really, the last couple of slides was just, questions, feedback. That's it. I'd just like to thank everyone over at CalHFA. We enjoy working with you all. It was a great year. We got everything done, and we're looking forward to this year and keeping everything on pace. So, and definitely being back out on site and get this audit done even faster if possible.
Is that even possible? Thank you,
We're gonna try.
Mandy. Thank you, Liz, for your dedication. And again, congratulations on your ability to, get two audits out as well in one year. So we appreciate that, as always. Melissa, do we have any public comment on this item?
If there are any members of the public in the audience that would like to ask a question, make a comment at this time, please raise your hand. We have no hands raised.
Thank you, Melissa. And if there's no other comments by committee members, we'll go ahead and move to item number 5, which is the update on the auditing services contract. If we can expedite any presentation, that would be helpful.
Sounds good. I have a slide presentation, so if somebody can advance to the first slide, please, on the screen. Thank you. Next slide. So I think this discussion was sparked by Mr. Henning last time, so I'm happy to report back and sort of just outline what the current state of the contract is for our current auditor and what we are planning to do, how we're going to procure the new auditing firm or contract with the new auditing firm. So we currently have a partnership with CLA. They just made a presentation. We are, as we look forward, we are thinking that their contract going to be ending in December 31st, 2025, and they will be auditing our Housing Finance Fund, which is completion of our AFR, annual financial reports. They're also going to be auditing our federal programs, which is Section 8 and Section 811. And they're also going to conduct 2 compliance audit for 2 down payment assistance program, which is Dream for All and My Home. So that's going to be what's scheduled for this year for CLA to complete. And that completion date, we're aiming, subject to us obviously receiving the data from State Controller's Office for the OPEB and pension, that needs to be completed by December 31st to meet our mandatory statutory deadline. Next slide, please. So I have put together a quick presentation for the procurement timeline and key milestones. So today's presentation will mark the key milestones and timelines. So this is sort of a beginning of the process. However, I wanted to mention that we already have put together sort of a draft of the schedule. And as you can see from the slide, this is a multi-phase process. And so I'll try to review in a, as you asked me, a little bit quicker and a little bit greater details, though.
It's okay, you can.
Sounds good.
Yeah, it's one slide.
So the next step will be defining the auditor requirements, And so that includes basically taking in consideration specific skills, experience, qualification, and their experience in the sector. So we're obviously looking somebody who have experience in the public sector, have experience with financial services, housing industry, and familiarity with sort of similar organization as we are, housing agency, or similar size and complexity. As you know, our financials are pretty complex. So then we have to identify the scope of work. That's basically outlining the framework of the audit, including the areas to be audited and the fiscal year. And then we have to determine how we're going to establish our selection criteria. So our selection criteria will consist of experience and expertise, which is a proven track record of having conducted auditors audits with a similar organization or industries, reputation and integrity, cost effectiveness. Basically, it's a fee structure that aligns with our budget while still ensuring the high quality results. And then the important part is technology and tools. So as you know, the privacy and all the data access, it's super important too. And there's a lot of financial information being shared during the audit. So the ability of the new auditing firm to leverage modern audit tools and technology to ensure efficiency and accuracy, it's greatly important. So the next step is step number 3. That's going to be the application process. Once we identify and define all the requirements and we move forward to the selection process, there will be collection of the application, screening, ranking, reference checks, and the selection of the top candidates. So if you go and review that in the break it down on the individual elements, that will consist of application rating. So we'll be reviewing the proposals from different firms, making sure we're going to be comprising the finance and senior management representative as the selection committee at that level, and then we'll rank the application based on the predetermined selection criteria. So the committee that's going to be basically the screening applicants also going to be responsible for qualification screening, which is going to include to make sure that we have a required certification, understanding of the industry-specific regulations, ensuring that the audit teams have necessary expertise, and firms will be asked maybe to provide case study or references to demonstrate their qualifications. And then we will be doing the reference checks for those candidates, making sure we will be contacting previous clients and gauging the quality of their work, adherence to deadline, customer service, and making sure that they don't have any disciplinary history or past regulatory issues, and then to make sure their firm meets our ethical standards. And lastly, we'll be selecting lastly for that step, the top candidates. It's going to be basically creating a short list of the most suitable candidates, and this short list will include the firms that align with our requirements, the scope of work, and selection criteria. The step number 4, and that's something that's we're going to be doing that's going to require your attention. We're going to be engaging all of you, and so the timeline for this step is probably sometime in August and September. Once we have created a short list of candidates, we will engage in a more personal interaction with the top candidates to assess their candidates' fit with our organization and confirm the technical capabilities. So we'll be using your input and evaluating the candidates and determining which firm best aligns with our agency needs. So we'll be contacting you, scheduling meeting, discussing questions that we're going to put together to ask for those audit firms. So we're going to be, the interviews will consist of testing the communication skills, so assessing how well the auditors can communicate complex finding to non-financial stakeholders, because it's important for them to explain that.
Right.
Past experiences and interpersonal fit, which is very important. Evaluating whether the auditor can be collaborative partner and work seamlessly with our financing team. And the last step, we will be engaging our legal department to enter into the contract and make sure that's going to be basically a negotiation phase where we're going to be ensuring that their alignment on fees, scope of work, deadlines, confidentiality, data handling, and dispute resolution process, which is very important during the contract negotiation. So that concludes my report for today. So I welcome any questions or comments from the committee members. Thank you.
Chair.
Great, thank you very much.
As the state treasurer's office probably knows, this process is very aligned to the selection process for the CalPERS auditor. They do leverage the audit committee to do final interviews for this, so.
Right. Director Henning, do you have any other questions?
No, I really do appreciate you guys taking my comments to heart the last time we came together, and appreciate the hard work that you guys did here. I think it's excellent. I think that if we start to have these good standards that are put place, like CalPERS does have, I think it's excellent that we're able to adopt them. And hopefully it lends itself to a good, robust process.
I'd like to request that maybe when you come up with the criteria for evaluation, that's the point in time that you report to the committee, and that we have a discussion around the criteria. And I think that discussion will be very helpful, so that when it comes time to actually selecting someone, you have buy-off from the committee members.
One quick question. How big is the pool?
Well, right now, we do not really know, depending on how many candidates, qualified candidates will be applying. So we'll be engaging all different kind of things. We're going to go to ASPCA website to make sure that we are looking at the different accounting firms. We're going to be, targeting small businesses as the state wants to have more business activity and give opportunity for those firms. And then we'll be basically posting their request for quote or proposal on our website and making sure that, but I would think like for the audit committee, it's going to be one or two top candidates that we are thinking to bring to you for the interview.
Right.
We would probably do a minimum of 3. We do like to have the 3 choices at least at minimum for the final round for the committee to interview, so. But the pool will be just based on the submissions we get from the RFP. But Oksana did outline that we'll do an extensive outreach to ensure that that RFP pool that we're selecting from. But we would bring all top candidates too, so 3, max 5.
Thank you. Thank you very much. Thank you again for the presentation and for abbreviating that. Melissa, do we have any public comments on this item?
Are there any members of the audience that would like to make a comment at this time? I see no hands raised.
Wonderful. Okay, with that, we're going to go ahead and move to item number 6. Other committee matters. I think we discussed a couple of report backs and a couple follow-up items. If the staff has any questions about those, feel free to reach out to me, and I'll help clarify any of our desired questions. Do committee members, Director White or Director Henning, have any other comments? Okay.
Only next meetings. Which
On the agenda. So right now, we were contemplating having 3 meetings a year, right?
Melissa,
spent-
keep me honest. I think we have 3 scheduled.
We actually have 4
Okay,
on the
4.
schedule
Okay, great.
currently. We're required to have 2 as part of the charter.
Right.
And so we've specified agenda topics for the 2, so we know, that we have those. And we've done them on a quarterly basis. So on the other additional 2 meetings, we don't have agenda topics at this time, but we can certainly add those.
We've internally have assigned an executive team member to this committee to make sure that we're following up. It's just this committee is going to be getting a lot more information. So we felt from a operational standpoint, and we've actually asked Ms. Oksana here, our comptroller, to do that. So the next meeting is in May, Oksana?
Yes, I can actually answer the question. So basically, as Rebecca stated, that I'm going to be sort of looking at the calendars and making sure that you guys have meaningful discussion and have a lot of topics for the remainder of the year. So the next meeting will be scheduled for May 20th, and that would be the risk discussion that we're planning to bring to the committee to review the framework of the risk framework on the agency. And then we're happy to include some additional items that sort of come out from today's discussion as well into that meeting. Our next discussion probably will be, and I probably include the selection criteria or other items as well, so that's going to be the May meeting. The next meeting will be sometime in August, where we're going to be interviewing those top candidates. So that we're sort of already kind of planned. And the additional meeting will be in the fall, where our Chief Information Technology, Ashish Kumar, comes in and doesn't, basically speaks about the IT security audits and give the overview of the agency security and IT technology aspects from the auditing standpoint.
Great.
So that's basically kind of high-level outline what we plan for the year for you.
Well, what a great idea to assign an executive team member to that. So I appreciate that, and I look forward to working with you, Oksana, as we define the agendas.
Perfect.
So thank you very much for that. Okay, with that, we're going to go ahead and move to item number 7 for public comment on any non-agenda items.
Do we have any members of the audience interested in making a comment at this time? There are no hands raised.
Wonderful. Okay, so I'll entertain a motion to adjourn.
Motion to adjourn.
Wonderful. Thank you, Mr. Henning, or Director Henning. Thank you, everyone, for participating. I appreciate it. And 10 o'clock, right on the dot. Thanks.